Overnight, Porsche's stock price fell by nearly 10%. And in fact, it's down by nearly 20% this year. This was a reaction to the news that Porsche is set to make almost no profit on its cars. And it's also facing a multi-billion-dollar wipeout on, well, sunk cost on its investment into electric cars, which it has to some degree cancelled. YouTube's new algorithm means that you're often not getting all of our videos in your feed. There's 7,500. I'm pretty sure you're probably not seeing a lot of them. In the description, there is a link to our newsletter. Click on that and you can get an update every day of all the latest news in the electric car industry. Hello, my friends. Welcome to the channel. I'm Sam Evans. You're watching the Electric Viking. What is going on here? Well, Porsche stock since the start of this year is down 19%. But as you can see from this chart, it's fallen by 10% overnight. Investors are reacting. They don't like what they see. Margins of 2% is what's unheard of before in the luxury car segment. Porsche's aggressive push into the world of EVs has been stalled, and I think this is a bad decision from Porsche. The automaker admitted that its commitment to EVs, well, followed by a sudden change of course, cancelling one of its EV programs, has created a $2.1 billion wipeout, which is 1.8 billion euros. And that's a massive hole in its operating profit. Investors reacted quickly. Stock price fell by nearly 10% overnight, which is its sharpest intraday fall since it listed in 2022. Earlier this week, Porsche made the sudden but not unexpected announcement that its new flagship SUV, called the K1, will not launch as a fully electric vehicle as originally planned, and instead debut with internal combustion and plug-in hybrid powertrains. Porsche also confirmed that range-topping versions of the next generation 718 Cayman and its Boxer convertible will come with combustion engines, despite those vehicles being developed exclusively for EV platforms. So they're going to re-engineer these cars, which will require huge amounts of time and investment to make them internal combustion alongside electric versions as well. The move is meant to help stabilize margins. Porsche doesn't make any profit selling electric cars. Clearly, as you can see, its profits have been in free fall since it began selling EVs. It's making clear its early electric strategy was too costly, and it says out of step with what consumers wanted, but the truth is Porsche's most popular car worldwide is actually the electric Macan. So yeah, it's nothing to do with demand. It's all about profits. Following news of the dramatic change of plans, Porsche's share price in Germany fell by 9.5%. It's down by almost 30% this year, says Bloomberg. The decline has been steep enough to push the company out of Germany's DAX benchmarks index. In addition, Porsche has already been forced to cut its profit guidance 4 times this year alone. Cutting profit guidance 4 times in 1 year is considered an embarrassment. You really don't want to do this. It doesn't look good at all. The ripple effects are hitting the wider Volkswagen group as well. According to Bloomberg, the sports car maker's parent company will take a €3 billion non-cash impairment related to Porsche's decisions, prompting it to lower its operating return forecast from as much as 5% to around 2%. Yeah, this is not looking good, and analysts are saying the same thing. I mean, auto analyst Matthias Schmidt told the media that buyers are putting little value on luxury electric cars, particularly in China, which explains Porsche's return to, hoping to sell high-margin combustion models. But even that market is shrinking as well. Citi analyst Harold Hendricks was even more direct, pointing out that Porsche has now been disappointing investors for more than 2 years. It is hard to conclude that these disappointments have now completed, he said. Yeah, I agree. It's the beginning of a long spiral down, not just for Porsche, but for legacy automakers. Things are so bad that Volkswagen and Porsche chief executive Oliver Blume is facing enormous pressure in Germany to step down from his role as the head of Porsche, allowing someone else to lead its turnaround, if that's even possible. Reports say that the search for a new Porsche CEO has already started. And the Porsche and Piche families are having discussions with potential candidates. No idea really who those are. And I honestly just don't see how Porsche can pull themselves out of this situation. They're actually digging themselves a bigger hole because by pivoting away and changing their minds on EVs, they're actually just going to lose market share. By 2035, most 90% minimum of the world's cars will be electric. And Norway is a precursor for the rest of the world. It shows you what is going to happen. Porsche knows this, but it's also bleeding, and it just feels like it doesn't have any choice. So that explains things. Let me know what your thoughts are. How do you feel about this? Let me know in the comments. Thanks for watching. Bye-bye. The Sydney EV International Motor Show. If you want to get a 50% discount on your tickets, all you got to do, click the link in the description and use the promotion code that's in the description. Just copy and paste that. Now, I should mention there's only 200 tickets available per day. So if you go to use the promo code and you can't get a ticket, wait till the next day. Don't wait until the day before the show to get your tickets, because otherwise you'll probably miss out on getting the 50% discount. Porsche sales globally have continued to fall, but they have crashed, unfortunately, for Porsche in China and Germany. Only one country is saving Porsche's bacon, and that country is, well, probably not a surprise to you. Hello, my friends. Welcome to the channel. I'm Sam Evans. You're watching the Electric Viking. First half sales this year for Porsche have been a little disappointing. Sales in China fell by 28%, to the point that China was once Porsche's most important market in the world. It's actually now not even close. I mean, they only sold 21,000 cars for the first 6 months of the year in China. So 28% fall. Germany, similar crash, down 23% to only 15,900 sales for the first 6 months of this year. I think the majority of this decline is thanks to electrification. Of course, there's so many good options now, so many good choices now. However, interestingly, the United States is kind of helping to prevent Porsche sales from completely crashing. Global sales for Porsche were down by 6% because sales in America were up, North America, I should say, Canada and the United States were up by 10% to 43,500, which is quite a surprise considering the tariff challenges that Porsche has been facing. As you can see now, North America is easily Porsche's most important car market. If Trump does put tariffs on them, which he has on Porsche, then they are going to pay a very big price for those tariffs because it's their most important market now.